Well, let's take a closer look at this new board and why China wanted to launch it now. For that, I'm joined by Anthony Chan, former chief economist at JPMorgan Chase. Good to see you.
Good to see you.
So give us an idea, why was it so important to start this specialized market at this point?
Well, as you know, the technology is very important to China's development. The trade frictions between the United States and China certainly has made it at least somewhat uncertain as to what these companies can expect if they come to the United States for listing. Also, this new exchange is going to allow smaller companies that perhaps don't have any real profits in the beginning. So it's more like incubator companies that are getting an opportunity, again, to give China that opportunity to develop that technology that they need to fulfill their national goals.
So what can investors and companies look forward to there that they didn't have before or can get from other markets?
Well, I think that right now what the investors can get is the opportunity to get companies at an even earlier stage. This is a little different from the Chinex exchange that, of course, almost a decade ago and of course, started with huge fanfare. The real test will be whether or not these companies start to perform and start to earn profits eventually. We know that many of them are not earning profits, but the enthusiasm is so great that you saw that the 25 companies certainly all moved up higher today. So there's a lot of enthusiasm. The question is whether or not they will meet expectations over time. But for now, it's all full of excitement.
And obviously, we do see companies on the Dow Jones and on the NASDAQ that aren't quite profitable yet. So talk about this registration-based IPO model that's being used with the STAR market in terms of the pros and cons for companies.
Well, I think that right now the pros are that a company that perhaps would not be able to get listed in a more established exchange may not have the opportunity to basically make their mark and really get their business going. This exchange gives opportunities to companies that are at such an early stage that perhaps they would be overshadowed. But remember, out of these companies, we definitely are going to see some winners, but you have to realize that when these companies are at such an early stage, the risk is definitely much, much higher.
So then what are the impressions from the other big financial centers? Do they welcome this new addition, or do they view it as competition yet?
Well, I think at this stage, I don't think it's real competition because I don't think it's comparing apples to apples. These are really companies that are just sort of evolving. I look at it in comparison to the United States, more like the private market. A lot of the companies in the private market are still not ready for IPOs, but they certainly get private funding. These companies are having the equivalent experience, except that they're getting an opportunity to be listed because they're not really ready for the big leagues, but they're ready to start innovations. And for that reason, I think it's a bright opportunity for China because a lot of innovation can take place, but at the same time, one has to be cognizant of the fact that with early stage, you have to accept that there are heightened risks.
And we know that with obviously tech companies drawing particular attention in the US-China trade war, as you mentioned, what sort of impact do you think we can expect on the STAR board?
Well, I think on the STAR board, maybe companies are going to be very excited that maybe later on, if we see that it becomes more challenging for Chinese companies to list in the United States, that maybe over time you get the evolution and you'll get more established companies into Chinese exchanges. So this could be the beginning. And again, much of this, I think, is being triggered by a lot of the uncertainty. You've heard in the United States quite a bit of talk that maybe we should restrict the listing of some Chinese companies in the United States and not allow them to raise money. This is an early attempt to at least meet that challenge with an alternative.
And we know that they're starting with the 25 and sort of gauging the reaction so far. So in terms of the pace or the interest from upcoming IPOs, what should we be keeping an eye out for?
Well, I think what we need to be keeping an eye out for is whether or not these companies eventually generate profits. We really have to do a lot of due diligence because many of these companies in this exchange don't really have a real track record. The exchange doesn't put a requirement on price-earnings ratio. In other words, it's a lot more flexible but with that flexibility comes a lot more risk. So I think investors really have to do extra homework because of the heightened degree of risk involved with these companies. So perhaps a lot more due diligence, given that the regulations are a little bit more lax.
Anthony Chan there, former chief economist at JPMorgan Chase. Thanks so much.